Hello, I'm Ken Moraif, and this is our weekly market alert video for the week ended September 30th, the end of the third quarter. And boy, do we have a lot to talk about. But before we dive into it, I just want to give you a quick update. I finally got to meet my grandson, Nathaniel. And everybody told me that when you meet your grandchild and you hold them in your hand, you hold them in your arms, that it transforms, it changes your life. And I was like, yeah, whatever. Well, I have to say, it's true. What happened, it's a strangest sensation, but when you hold that baby in your hands, it's almost like there's an energy connection between the two. It's almost like you blended into one, and it's the weirdest thing. I want to share with you a picture here. I don't know if you can see that very well, but that's Nathaniel right there looking at me like, wow, you are a weird being. But anyway, that's not what we're here to talk about. Let's talk about the quarter just ended, and specifically what's going on with this crazy market that seems to be, September was the worst month for the S&P, for the stock market, since March of 2020, which was the worst month of last year, March and April of last year with the pandemic. So why would that be? Well, you guys may remember the old soap opera, As the World Turns. Well, I'm calling this As the Pendulum Swings, right? So what happens is that investors tend to be emotional. We're human beings after all. And so when things are going well and we're optimistic and we're looking into the future and we're seeing everything rosy, investors tend to get very excited and start buying. And when the market's going up, they start buying more because it's going up and it feeds on itself, and the pendulum swings all the way, and it becomes at some point irrational exuberance, as Alan Greenspan once said. Now, that means that the market basically overshot. It went too far. So what happens then is reality sets in, as we're seeing right now, where the pandemic is not coming to an end as fast as we had first thought. The supply chains are not being filled as fast as we thought. Inflation is lasting longer than we thought. So all of a sudden reality sets in versus the romanticized perfect vision we had of getting out of the pandemic and everything would be fantastic. When that reality hits, the pendulum swings back. And inevitably what happens, in my view, is that it swings too far the other way because now people are pessimistic and the market's going down and I don't want to lose money and maybe it's time to get out and all these terrible things are going to happen, and it swings the other way and it tends to overshoot the other way. And when that happens, then the buyers say, wow, you know what, there's bargains and I'm going to start buying, and it swings and it does. So it does that. The bottom line, though, for us has always been, as you guys know, looking at profits. Because over time, what generally drives the stock market is profits that companies have. The more profits a company has, the more valuable it is. Its stock price goes up. If it starts to lose profits or have no profits, then its value could go down. And so the profit is what you look at in our view. And if you keep your eye on that ball, then what you see is that we are healing. The economy continues to heal. We continue to see companies, the issues that are slowing things down, the supply chain, inflation, those things should abate over time. They're not permanent conditions. The variant, as we see, is not going to last forever. Even the CEO of Pfizer said a year from now, the pandemic will be over. We hope. So the things that are worrying people, that are causing this selling, should abate. And so this is, in our view, what's going on, an emotional reaction and some profit taking, given how well everything has gone up until now. So September was the worst month in a year and a half, going back to March of last year, which was when the pandemic was announced and we shut down the economy and all of that. So it's remarkable, but we believe it's a reflection of an overshoot by the market. It went up too high based on valuations and profits. Now that the reality is set in, it's swinging back the other way. Overall, we're not overly worried about this, and we think that this may be actually a buying opportunity, not an opportunity to panic and sell. So we obviously always keep our eye on the exits. We always plan for the worst. So if this turns out to be a big bad bear market, We certainly have our strategy in place, and we will get out and we will do everything that we can to protect you from major losses. That's our goal. As you know, growth is important. We want to grow your money, but at the same time, we believe that protection is even more important. And we hope that our philosophy of that, our invest and protect, gives you peace of mind. I hope that we hope that you can sleep at night. You don't worry about this stuff. You let us do the worrying so that you don't have to. And we wish you well. And we hope that all is coming up roses for you. And we will talk soon. So thank you for watching this video. Oh, and by the way, please share this video with your friends, your business associates, your family, anybody that you'd like. Feel free to do so. And also subscribe to this video. You can do so, and then it'll be delivered to you automatically, and you don't have to do anything. It'll be downloaded to your device. Okay, so thank you for watching, and we'll talk soon.